And what is the demographic for smaller buildings? Like who is buying? Like I'm connected with a lot of brokers on LinkedIn, and I see them putting the building for sale, and they're advertising the 3.5% cap rate, and they're advertising it could potentially be in the in a development potential development in the future. But who is buying these properties? Because when I talk to the brokers, I'm like, why would somebody buy a 2%, 2.5%, 3% cap rate property? The rental yield is so low. And the answer almost always is capital preservation. They're just buying it to park their money for whatever reason it is. But what is the demographic these days? Who is buying 20 unit buildings, 30 unit, 50, 100 unit buildings? Who is buying these? And are they buying it because they want to sell it to a developer later on? Are they buying it to park their money? What's the demographic of people who are buying these properties?
I can speak from my experience on there's two apartment blocks in Vancouver that my family has sold. And both were in the Marpole area. One was 13 suites and one is 26 suites. And so those are the smaller ones. And those were typically not touched by REITs either. REITs not gonna probably touch a 13 unit building. But those were bought by local buyers who, I don't know what to say. It is a bit of capital preservation for sure. I've had people say that, this is a great place. If there's gonna be inflation, maybe I'll just park in put my money in this apartment block. Makes some sense, I guess. And then, but for them, I think there's a lot of denial. I think they're really believe that these are still great investments and that someone's going to come around later and buy them off of them. I think there's a lot of people who are not buying because they know there's no return. One of the big brokers in Vancouver who sold a lot of apartment blocks this year has also wrote an article recently saying that almost everybody he knows that owns apartment blocks is underwater. They're losing.
Wow.
And so this is a bit of a conundrum for me because I don't understand it fully myself. If I had the cash, I'm always looking for cash flow, and that's what's been forgotten. Yeah, they may be buying it for a future gain. But again, a little bit of denial here because they don't understand how difficult it is to build in Vancouver, even though that's so well publicized, how difficult it is to build in Vancouver and the cost to build in Vancouver or anywhere in British Columbia for that matter. So they're obviously not following the news. They're not seeing that the trend is going worse. And they're not seeing that the government, Horgan's got a 56% approval rate. He's not going anywhere. And at the NDP, they're just going to make it worse as long as people still keep paying the price. The NDP is not going to be discouraged by any of this. They're thinking that, okay, there's still lots more to milk here. And so there's a little bit of, as I say, a disconnect between the investor and what they're looking to get or what they still think is possible and the reality. I think a lot of older people, I'm older myself, but people over 50, probably over 60 that are buying these buildings still, who have the cash. It's not a good investment. I don't know why they're doing it, to be honest with you. There's better places to park your money.
Yeah, there's all these difficulties that exist, and then on top of it, you throw on rent control.
Yeah, 1.5% after 2 years of nothing. But one other point, and I don't mean to take up too much time here, but
take your time.
Yeah, it's just in regards to the part of the fallacy that makes people buy this. I don't know if you know this or see this as much as I do when you talk to people who are developing. Vancouver is the greatest city in the world. And it's not. And it's a nice city and everything else. It's got 2.5 million people. It's going to be smaller than Sacramento in next year. Sacramento, California, greater population is going to pass Vancouver. Because it's growing faster than Vancouver is. Vancouver's population increase, if you look at it over the last 20 years, it's below 1%. It used to be about 1.2, 1.3. When I was born, it was about 1.4% per year. It's under 1. And it's probably because of affordability. It's also because it's in Canada. We have a low population. But, Vancouver's not the be all and end all. You traveled, and you've been to Miami, you've been to Los Angeles, you've been to Chicago, you've been to who knows, London, Paris,
Orlando, Charleston.
Orlando, which will all be next week, actually.
Nice.
But yeah, you see these places and you go, hold it here. You know, these are good places to invest. These are places that are growing fast. Prices still remain competitive because they allow growth, they allow building, they know what they're doing, and there's cash flow.
Cash flow is king, Dale.
Cash flow is king, and that was the only motivation to buy. Capital appreciation was a sidebar. Well, capital appreciation came when you held on to the property for a long time. Now, even with capital appreciation, if you're going to hold on to a building for a long time, you're paying capital gains on that inflation. There's no indexing for capital gains. You're paying that. And so if 𝗖𝗣𝗜 𝗖𝗽 was proposing 75% increase, or 75% of capital gains is taxable, there goes, for a guy like my father, my parents, you know, buying in the 60s, there goes your entire gain. You're just paying, you just got your, you know, you basically just parked your money for 60, 70 years. And so, but I do get that mentality. I don't know if you share that or not, but people just think Vancouver is the be all and end all. There's no other place. And so it's local people buying. Now, the bigger buildings, of course, are mostly bought by REITs who have cash, who have to do something with it. And so, I mean, they're not really, you know, they got a mandate. I don't know how they're making it. I don't know if you're investing in a REIT right now or what your monthly payments are, but it's been a long time since I was involved in a REIT. I don't even know what they're doing in Canada these days.
And the cost to manage a REIT, I mean, hundreds of employees they have. We discussed this. Yeah, it's just unbelievable about the REITs. And that's why people are, but that's what it is. The Canadians are happy with that 4 or 5% gross return that they get. Inflation is close to that, probably more than that right now. And what we realized, and what was the impetus for us to move to the US was when I first heard about the investors in the US doing this concept of apartment syndication, where they would buy these apartment buildings, bring on investors, and the returns they were giving back to the investors, I was shocked. So I'm like, I had to check the presentation. I had to then research and look at other deals that were being presented. I'm like, how are these guys able to pay their investors 7, 8, 9% pref returns? Meaning that the investor has to hit that return before they participate in the upside. So I started researching it. For a Vancouver developer guy, for me, it was a shock. I'm like, how are these guys possible? Where is the surplus coming from? When I realized that the rental yield are much higher, that in most cases, they're playing the cash flow game and appreciation, but then they're going in there and they're also force appreciating the asset with the value add, adding some, you know, washer dryers or doing some small renovation. And they're benefiting from the fundamentals that need to exist in any astute real estate investment, which is cash flow, appreciation, and forced appreciation, which in Vancouver is non-existent, doesn't exist.
And then you add the population growth in Vancouver. Is that a 1% or one, you know? Keep in mind that you're dealing with that as well.
Unfortunately, the population growth has been the #1 key because people, developers, investors keep looking at the 300,000 people that immigrate to Canada every year. Most of them want to live in either in Vancouver and Toronto. So they're like, hey, I'm going to have this guaranteed here. So there's going to be demand, and they're banking on that. But just like Dale said, having a brand that Vancouver is the greatest place to live, I mean, it's one of the most expensivest places. You're originally from Alberta, and we've checked as far as expenses in Alberta, car insurance, you know, private health insurance, different things that we assess, cost of living. I mean, everything. Vancouver is so expensive. And then now you got taxes at every level of government, medium income, 90,000, medium home price, 1.3 million. So the math doesn't make sense for Americans when they look back at it. And
especially for real estate investors like that.
Yes,
100%.
Absolutely.
The numbers, it's a difficult concept for people to get their head around.
But why don't fundamentals matter to the Vancouver or the British Columbia investor anymore? It's shocking. That's the part that shocks me. I guess to summarize all my sort of previous comments here, it really is what you said, August. It's the fundamentals are gone, and if you're investing contrary to the good fundamentals, where does that end up? I think we've seen this story before. I mean, you're not supposed to buy a stock when the fundamentals are wrong. You're not supposed to buy real estate when the fundamentals, but people are. They just think there's going to be an idiot down the road who's going to pay more for it than you did.
They've been programmed in their mind.
Yeah, and they think that it's Vancouver. Of course it's going to go up.
Yeah, exactly.
And, you know, It's not, it's going to hit a wall sometime.
But unfortunately,
Has
to exasperate it is also you got experts who keep pushing this idea of invest in Vancouver, everything's going to go up. You know, there's obviously real estate is cyclical. We all know that if the fundamentals don't exist. And now to add to that,
But
rent
if you
control.
compare it with other places, definitely.